Hey guys, what's up, what's going? Welcome back for another video. In today's video, we're going to be starting week number 1 of the Canadian-based dividend growth investing case study. So this case study is going to be about building a Canadian-based dividend growth investing portfolio of individual Canadian stocks completely from scratch. Now we're going to be giving you guys a weekly update how we built this portfolio completely from nothing to a portfolio that has lots of stocks, is growing and having lots of compound growth and doing all the awesome things that dividend-based investing can do for you. And because I'm a big fan of transparency and I like to kind of do walkthroughs on this channel and I like to take you guys step by step, all these videos which are going to be done on a weekly basis, we're going to basically start with the portfolio update. So I'll give you guys updates on the portfolio. I'll show you guys the stocks I'm buying. We're going to be using Wealthsimple to build the portfolio. So I'll show you guys my Wealthsimple account. We'll make an account together and do all that kind of stuff. And I'll show you guys like the different things I'm learning as a dividend growth based investor. I kind of want to pick one each video each week to kind of focus on a different aspect of dividend growth investing. And then we can kind of dive into it and learn new things. So it's kind of like an educational series as well as a portfolio update series. So before we go any further, I just want to say really quickly, if you guys like the video, be sure to smash the like button. And if you guys want to be notified of when I do these updates on a regular basis, you want to follow me as we kind of do this dividend growth based case study week by week, be sure to subscribe to the channel. And if any point in time throughout this case study or this video series you guys want to follow alongside with me and you guys want to build your own portfolio, there will be a link to Wealthsimple Trade. You guys can set up your own account by using my link. And there is a link to Blossom Social. Blossom Social is an app that I use to basically show all my investments and track my trades. And I will be actually asking the community of Blossom to basically help me build this dividend investing portfolio. So if you guys want to be a part of that, make sure you click the link and you guys can basically do that to help support the channel. If you guys want to support the channel, the best way to do so is to sign up for Wealthsimple Trade and make an account and follow me on Blossom. So the very first thing we're going to talk about in the very first week is going to be one of the most basic aspects of dividend growth based investing, and that's dividend growth. And one of the main things you want to look for when it comes to dividend growth based investing is looking for companies that are growing their dividends. It sounds pretty simple, it sounds pretty explanatory, but it really is one of the core aspects of dividend investing. You want to see companies that have dividend yields, you want to see companies that are growing, but you also want to see companies that are growing their dividends on a regular basis. So when it comes to dividend growth, there's a lot of different things you're going to look for. And throughout this case study, we're going to be focused more on the growth-based side of things. So in fact, the very first stock that I'm going to be buying in today's video is, by definition, I would say a dividend growth-based stock. It's a stock that has lots of growth, but also has really aggressive dividend growth. Now again, if you're going to be buying dividend stocks with higher yields, you'll probably go for a little bit less growth. That's only natural. But because some of the stocks we're going to be focusing on, at least in the beginning, are going to be more growth-based companies, we're really looking for companies that are really aggressively growing their dividend on a regular basis. And the cool thing to think about it is, imagine buying, shares of a stock. You buy it in year 1. And you hold those shares in every single year. You don't have to buy any more shares. Nothing happens. It doesn't matter what really happens. That company is going to be growing that dividend. So it's like getting a raise every single year. You don't have to do nothing. And it really starts from the very first year. So 10, 15, 20 years later, over the long term, it really starts to add up to be a lot of money in your total return of your portfolio. So enough about dividend growth and talking about that stuff. Let's see a stock in action. I'm going to use you as an example of a perfect dividend growth stock. So the first stock I'm going to be adding to my portfolio is probably going to be no surprise to anybody who watches this channel, but it's going to be Alimentation Couche-Tard. That's ticker ATD. So before we go any further in the video, I think it's appropriate to give a quick little introductory to ATD. So if you guys don't know, I'm sure you guys have seen this business around. You might not be familiar with the stock, but you're probably familiar with the company itself. So this is the brands that they own. So they currently own Circle K and Max convenience stores. I don't know if the Max convenience stores are still a thing. Maybe some of you guys in the comments can let me know, but I haven't seen one for a long time. And I know a lot of the stores that we had here basically got converted to the Circle K ones, but these are basically the big convenience stores, the gas stations that you see. There's that little bird there, their little icon there, and they're all over the place. Like, you guys can see them all over the place. And they're a pretty big business, and they're always constantly expanding, what I'm a big fan of. And I'm going to kind of highlight this. I'm glad they kind of stuck this little map on their website so I can kind of point this out here. So one of the big things I like about the company is that they're focused heavily in North America. And this is one thing I didn't know prior to doing this video, but they actually have a huge holding in the United States. 7,000 stores in the United States versus 2,000 in Canada. So I actually didn't know that, but obviously their biggest holding is in North America, and they are a Canadian-based company. They're actually based out of Montreal. That was when the first store was actually made, was in Quebec, so that's actually kind of cool as well. But 100,000 employees, so obviously, big presence in North America, which is important, obviously. But the cool thing we have here is we have crazy expansion in other countries as well. In Europe, we have 3,000 stores in 9 countries, and then I guess in Asia and yeah, I don't know, I guess it'd be like South Africa, kind of going towards those, the other continents in the south there. They're kind of like just all over the place here, right? 2,000 stores, 14 countries. So obviously the company is expanding and growing, and I like Canadian companies that can maximize the Canadian demographics, but also move down to like the United States, but then can also expand to the other companies. Gives that nice diversification and always leaves room for growth there. So pretty big fan of the company for doing that. They did recently release their press release for the financials for June. So basically they've done really well. You guys can take a peek at that if you want. And we're actually going to cover a little bit of the finances when we talk about the stock and we look at the stock chart on Google. So there's a few things I want to highlight on here before we go any further. And again, this episode of the Dividend Growth Investing Case Study is going to be focused on dividend growth. And I think ATD Alimentation Couche-Tard is a great company to use as an example. But we're going to go through some of the other metrics really quickly just to, once again, kind of just show you guys why I do like this stock. But again, focus in today's video is going to be dividend growth. But the company currently trades at $65 Canadian on the TSX. The ticker is ATD. That's ATD. Hopefully I'm saying that clearly there. Alimentation Couche-Tard. You guys can look that up if you want. And the company has just experienced tremendous growth. We'll take a peek at some of the more recent returns, and then we'll kind of look at the big picture here. So the year-to-date returns in terms of just a growth perspective is 8.83%. So once again, this is just stock growth. And as a dividend investor, the stock growth of a company matters a lot, especially if we're looking at dividend growth. We want real dividend growth companies. We want to pay attention to if the stock growing over time. So 23.77% for stock growth over the past year. So this company has just killed it, and it's actually been one of the best performers in my actual regular stock portfolio as well. Over the past 5 years, up 106%. So if you've been holding this stock for a while, you guys are probably doing pretty well. And then the max return is up 14,000%. Absolutely crazy, killing it. And the stock has pretty much been on its growth since, I would say, 2010, and it's been consistently growing on a regular basis. Just doing really, really well. Now, I talked about the financials before here, so we could take a peek at the quarterly financials. You can use Google to kind of take a quick little peek at the most recent ones if you guys want. Again, I'm not going to focus too much on that kind of stuff because I kind of want to make these videos very beginner friendly, but we can see things like the net income. Basically, what you're looking for is you want to see increases. You want to see increases. You want to see the company growing. That's always a good thing. Looks like this was the one for April, so it doesn't look like the most recent update is posted on here. But again, you guys can look in that if you want. But again, you want to see them kind of growing over time. You want to see lots of green, and you kind of want to avoid red. That's the basic way to kind of look at the financials here. And of course, the last thing we're going to cover, which is the most important topic of today's video, is the dividend growth rate. Again, this is the focus in the very first video. This is kind of really the basic thing. You want to look at a company that is steadily growing its dividend over a long period of time. The longer the period of time, the better. It doesn't have to be a super long time, but if we can see a consistent growth rate, not in terms of just the stock. So, my criteria is I really want to see stocks that are growing over the long term in time, from growing their earnings, they're growing, the stock price is growing as well, the business is expanding, but we also want to see things such as the dividend growing. That's the whole point, right? Dividend growth. Hopefully that makes sense for you guys. And obviously with a company like ATD, I'm going to kind of talk really briefly about its dividend growth rate and why it's so cool and why they're basically able to grow it as aggressively as they are. So we have this website here, and again, I'm going to give you guys some examples you can use to look up your own dividend growth rates. You can basically just go into Google, type in X company dividend growth rate, and here are basically the basic information you're looking for here. So I have this graph here that says the DGR3. This is the dividend growth rate over the course of 3 years, and it is averaged out. So this is basically the dollar amount of the dividend growing over the last 3 years. And they typically, I think, grow their dividend once a year. You can go to a website called dividendhistory.org, which you can actually look at the individual dividend payments of the company, and you can see the percentage growth. So this is actually really cool. You can see in 2022 in November, they increased their dividend by 27%. It's really easy to read chart. It's not always 100% accurate and 100% up to date, but they do a pretty good job, especially for the big companies, like the more popular ones. I noticed they're pretty on top of them, so just kind of keep that in mind and always reference things and check things, because sometimes things can, on some of these trackers, they're not, depending on when they report them and stuff, they can be a little bit off, but just make sure it's, double check it and whatnot. But we can see in 2020, looks like they basically increased their dividend at the end of every single year. We've seen a 25% dividend increase, and 2021 another 25% dividend increase, and then 2022 27%. And then 2023, obviously we're not at the end of the year yet, but we could probably expect something similar, right? The company is just growing at a crazy rate. And again, that example I used earlier, imagine as if all that money you put in the dividend you're just getting a 25% wage increase every single year. You take those dividends, you reinvest it back to the company, and it just compounds at a crazy rate. That's the whole point here. And the big thing you want to look at when you're looking for companies that are growing over the long term is you want to look at the long-term growth. So dividend growth rate over the course of 3 years, 23% per year. Over the last 5 years, we have 18%. And then, you want to make sure you can look at long-term, like 10 years, 15, 20 years, if you can gain access to it. But even over the last 10 years, we've seen a dividend growth rate of 24%. And it's so aggressively high, and they can increase it by so much because they have a low dividend yield, right? I don't know if I talked about this yet, but they have a dividend yield of about 0.56%. So this is a very, very low yield, and this is what allows them to grow it so aggressively. So if you can jump in a company, a dividend growth rate-based company, when they have that low yield and they're still in that growing phase, you can really take advantage of that dividend growth compounding factor. And the other thing we're going to kind of mention really quickly, and I'm going to talk about this in a future video, is the payout ratio. So this payout ratio is basically telling us how much of their money are they paying out to investors. Out of all their earnings, how much is it going towards investors? 13%. So 13% of their free cash flow, or whatever it is, or their earnings, I should say, is going towards their dividend. That's very, very low. So they can increase this by, to increase 13% by 20%, it's like nothing, right? So that's why they're so aggressively able to grow their dividend growth rate. And that's really one of the key metrics we want to look at. So again, I'm going to talk about that in a later video, but I just want to kind of point that out because it's important to kind of, once again, just educate you guys and let you guys know that you can feel comfortable investing in a company and feel comfortable about them, continually to increase that dividend. Now the account that I'm going to be using to build this actual portfolio is going to be the RRSP with Wealthsimple Trade. As you guys can see, we have the TFSA that is maxed out, so we can't put any more money in there. We have our personal account, which is kind of sitting here. I'm probably going to be transferring most of this at some point inside my fiance's TFSA. So the main accounts we have to work with, I think, is going to be the RRSP, and we can use the RRSP for lots of different things. You can put Canadian stocks, you can put US stocks, you can really do anything, and we're just going to be putting a small amount in here on a regular basis anyways. And since I don't have an RRSP, I think it'd be a good time to start to utilize it just a little bit, right? So we opened an account today on Wealthsimple Trade. Here's the RRSP. Now I do have a deposit that's kind of in the waiting period. It's going to take a couple days, and it is Friday at the time of doing this video, so I want to get the video out, basically for this week. So by the time the transfer goes through, it might be like Monday, Tuesday next week. So when the transfer goes through, I'll buy the stock, and then when I do the next update, you guys will see that I bought the stock, and then we'll move on to the next stock and kind of go forth kind of thing. So everything should be ready, everything should be good to go, and we'll be able to do our portfolio updates by the time I do the next update in the next week. And the last thing I want to talk about really quickly before we finish up the video is do a quick little update on the TSX. Here's the heat map where you guys can see some of the companies here. Now I can select the 7-day return. We're going to take a peek at the week to kind of see how the week closed up here since it is Friday. I think it'd be a good time to talk about the end of the week here. Now the day isn't over yet. It's 1:30 p.m. at the time of doing this video, so you guys might see it. You guys might see it tonight if I get it done. It'll be Friday or Saturday. It kind of depends. Hopefully tonight you guys will get to see the video. But here's some basically what's been happening in the Canadian markets. So oil and gas has kind of seen a bit of a neutral week. We've seen some stocks going up quite a bit. CNQ. And one thing I'm going to talk about is when we start buying some of our stocks, we'll kind of start updating them when we kind of see what's going on here. We can get a good bird's eye view, right? You obviously will see the stocks in my portfolio, but you'll be able to see like how they perform independently in my portfolio in the overall market. So we have stocks like CNQ did pretty good. Some other ones not so great. Suncor, for example, kind of down a little bit. When you go to basic materials, we see some other ones like gold. We see some other mining stocks. One actually looks like they've done pretty good overall. Industrials are doing pretty good too. The overall market actually in general for the Canadian markets is up quite a bit. Same with the US markets. If you guys have been paying attention, the past couple days we've seen quite a bit of increase. But CNR has done really well. CP has seen some pretty good growth. Fortis getting some pretty good growth. Some of these ones you guys might be familiar or not. AQN actually got a little bit of growth, which is nice to see. And the financials as well, which wasn't doing too great for a while is actually kind of kicking up a little bit. We see TD getting 3.42%, so lots of growth from TD, and the banks have been doing pretty good, of course, but they're always going to kind of bounce back and do pretty well. And then we have the consumer ones at the bottom here, kind of doing, I guess, more neutral, maybe a little bit of a gain, but nothing too crazy here with your Dollarama, your Loblaw, your Metro, and some other ones here. So as well as George Weston and different things. So anyways, guys, just a quick little update on the markets. I wanted to kind of include that before we finish up the video. That's going to be the end for the first week update. So like usual, let me know what you guys think in the comments. If you guys have any questions, feel free to leave them. And if you guys like this series and you guys want to kind of follow alongside with me as I do it, be sure to subscribe to the channel and follow me on Blossom if you guys want to see when I do my trades in real time.